Hey, happy Wednesday, hump day for everybody out there. If you're in Florida, or at least South Florida, we're building our ark today because the rain's coming down like crazy. So today I wanted to talk about one of my favorite topics, the markets and where investing the right way with discipline really pays off. I think it's important that I put this message out because lately I've been doing a lot of educational workshops and seminars on annuities. And so it makes people think that that's all we do at Champion Capital, at our Tachi Financial Group, and some of the other partnerships that I have, when it's not true. Annuities, we're not pro or against them. They're just a valuable tool for a portion of your monies. But make no mistake, we believe in the markets, and between my partners at Champion Capital, our Tachi Financial Group, and Independent Solutions, we have about $1.5 billion under management. But investing a lot of times, much like diet and exercise, takes discipline, not following trends, and chasing your tail so that you are rewarded and you're outpacing inflation. A couple of figures that are factual right now. Year to date, the S&P is up about 15%, and in a year's time, it's about 25% up. The NASDAQ itself is up 20% year to date and 31% over the last year. The Dow Jones, which a lot of people think is the only market to watch, and it's not true, it's up year to date 3.5% and 14% in the last year. Now, we all know that the market goes up and down, and the thing is, many annuity salesmen or organizations get a bad rap because maybe they don't fully explain why they're putting a portion of it. But annuities are for guarantees and people who cannot stomach the ebbs and flows of the market. Nothing goes straight up. And the thing is, nobody has a crystal ball. They're kind of winging it. They're trying to invest with the best odds in their favor with a diversified portfolio by having different asset classes and things like that. But of course, we have downturns in the markets. And that's a lot of times, this is mostly relevant when you talk to someone that are only insurance licensed and they scare the bejeebies out of you. 2008, it could happen again. 2000, what about 2020 and 2012? And the fact of the matter is, more times than not, those who stomach the ebbs and flows of the market are rewarded. If anything, when anything's on sale, you either double up or buy some more if you still believe in it. But you have to have a long-term output. You don't have to just buy high flyer growth equities. There are many great vehicles out there. There are some preferred stocks, low-cost ETFs, REITs that are available. And I want to explain that yes, the market has done tremendous the last 80 to 100 years, but in recent history, let's look at some facts and figures. The S&P, for example, in 5 years has returned 88%, which means you would have averaged over 17% in the S&P index. The NASDAQ, 126% the last 5 years, which equals 25% per year. And the Dow Jones, which is the most conservative of all them, 49% in 5 years, which is an annualized return of 9.8. Of course, there's no guarantee. Of course, past performance does not predict future performances. But if you look at a longer horizon, 10 years, the S&P, you would have averaged 18% in the last 10 years, 30% in the NASDAQ, and 13% in the Dow Jones. Why am I bringing this to your attention? Well, there are many of you that are interested in markets. Many of you look to seek advice. And unfortunately, because I've been doing a lot of educational workshops lately, some may get the impression that I'm mostly annuity. No, most of my clients' assets are fee-based, liquid, assets under management, understanding how the markets work. But there are also a fair amount of clients that I have and we help that they cannot take the ebbs and flows of the market, and some more conservative investments are appropriate, especially if they're already in the retirement age and they're drawing income from it. The other thing is, Some people with sizable portfolios making 3, 4, 5% is great for them. They don't want to take any more risk and they're happy. But for most investors that are working hard, trying to outpace inflation, they're looking for those double digit returns, 8, 10, 12% or more. The only way, well, I shouldn't say the only, but the most efficient way is to have it managed properly based on your risk tolerance, combining growth, equities, some bond portfolios, and other substitutes out there so that you can try and outpace inflation. But of course, there's no guarantees. And listen, when the market corrects, you can kind of look at it and make adjustments and rebalance as you go along. But the simple fact is, if your risk tolerance is not going to change in the next 3, 5, 7, 10 years, your investment strategy should pretty much stay where you started, because none of us can time the market. We can't chase the tail. If you believe people on TV know where the markets are going and what the Fed's going to doing, then they've convinced you that they have superpowers, because nobody truly knows where markets are going, what the Fed's going to do, what the next NVIDIA is, and so on and so on and so on. A lot of times this stuff is just not exciting and people lose interest. But if you stay the course, you get invested in a diversified portfolio, get with an advisor or a company that tells it to you straight and explains how things work. Many people like to do their own thing, but where we earn our keep is we govern behaviors with our clients. No, we invested a certain way for the next 10 to 15 years, and we're not going to change it because this year it's not looking as great as it was last year or the year before. I'm trying not to throw too many technical things out there. Many of my listeners are not financial professionals. They're just hardworking people who like to earn a return on their investments, and their expectations are met and there are no surprises. I will state again that annuities are not good or bad. They're just a different tool, and they've certainly gotten better than they have the last few years. So a lot of what I do is educate people on whether or not it is appropriate. Often those who cannot stand risk, or they're already at a certain age and they need this money to last for the rest of their lives, then it makes sense perhaps to have a good portion of annuities to safeguard their investments and to guarantee certain things. Another example is pensions are really rare these days as compared to what they were 10, 20, and 30 years ago. So often a lot of the annuity companies allow investors to build their own pension, but there are different moving parts that you need to understand. What happens if rates go lower? What happens if you change your mind and want all of your money? There are many moving parts. But tomorrow I'm going to have a interview with Independent Solutions, Drew Miller. He heads the Investor Relations Committee. I'm looking forward to it. I like to have financial professionals on the podcast to explain how things are going, how trends are going. And again, nobody knows for certainty what the market's going to do next month or in 6 months. We guess, but if you invest properly with a diversified portfolio, you increase the odds of being successful. Many people get caught up with that guarantee thing. And like many things in life, risk is rewarded if it's done in a smart way and a methodical way and a time-tested way. Investing is no different. It's the same as with exercise, fitness. If you want to be a professional musician, nothing comes easy. There's always ups and downs. And I want people to know that I know they're looking for who's going to be in the White House in November. Of course, many things affect markets, but overall, there are no other vehicles with the exception of maybe real estate or even riskier investments where investors can consistently get double-digit returns. And again, I'm not stating that that's what we guarantee for clients, because of course we don't. but most people do like to maintain liquidity. In other words, if they want to change their mind and get all their money, they'd like to, have that ability. And for those, you should never buy an annuity. Absolutely not. And there are many clients that like the idea in the fee-based business where if they don't like the way things are going, they can fire their investment professional and take their money elsewhere. So if you ever have questions, the office line is 561-537-5897. Again, 561-537-5897. My website is www.artacifinancialgroup.com. Again, I've got a lot of great partners. I have my partners in Texas with Champion Capital, my partners at Independent Solutions. I haven't been bored in probably at least 10, 15 years. I currently have 4 businesses I'm running, the 2 financial companies, the entertainment, plus a business consulting and public speaking. And we're looking also to expand that with many tax professionals and all. But seek out help. Invest your money wisely, but know that without risk, there's typically not too much reward if you're trying to outpace inflation. So as always, I look forward to helping some of you out there, and I'm looking forward to the interview with Independent Solutions tomorrow, which I should post on Friday. So look for it. And thanks for tuning in. Stay dry, South Florida, and we'll see you next time. Thanks.